Welcome. Can you guys hear me? Hey, Mr. Andrew, welcome to the stream. Hello to the Binance family. If you're here in the live stream, let's see a +1. Let's see a +1 in the messages, and we can look to kick off. Right. So let me get all my stuff ready. I think all my streams are ready. My web pages are good to go. Can see people slowly crawling in. Well, I say crawling in, making their way in to the live stream, which is good. So we'll give it a moment, let things settle down, and then we can kick off with the live stream. Guys, can you hear me? Let me see a yes in the comments if you can hear me, and then we can kick off. So let's give it a little moment, let people slowly filter their way into the live chat. Good. I think everything's working. I think we're streaming, we're recording. You can see me, I can see you. So let's kick off. Right. What a day in crypto. What a past 24 hours. Bitcoin over... Actually, yeah, well over 8% in the last 24 hours. We're trading above $30,000 on Bitcoin. Who would have thought that? Who would have thought that that would be the case today? Ethereum making its way up to $1,900, where it needs to be, where it all needs to be. Although, to be honest, the alts, I would say, are somewhat lagging, a little bit behind, but bear in mind that the dominance at the moment in Bitcoin is significantly high. So it is pretty much absorbing a lot of the liquidity in the market. But why is this happening? Why is this happening in crypto currently? Well, there's quite a few things. There's quite a few things that are happening. But before we do, for those of you who are just streaming in to the channel, I'm Firoz, I'm your host. This is Decentralized Chain, where we talk about all things crypto and blockchain. And in this video, I'm going to share with you some of the trending news that you need to know right now to give you an idea of what's happening in this crazy space. But before I do, make sure you hit the subscribe button, guys. Subscribe to the channel. Make sure you're liking the content. Hit the bell notification icon so you don't miss any of my upcoming videos. And let's get into it. Right, so let's cover the news articles for today. First one up, we saw on the Wall Street Journal, Wall Street giants back EDX markets, a new cryptocurrency exchange. Could this be the reason why we are seeing a bit of a pump in the market? Maybe. So this is a new cryptocurrency exchange, and it's backed by some of the biggest names in finance who are seeking business from brokers and investors, ultimately, which is what we're seeing here, interested in the digital asset space, but wary of troubles at FTX, right? Now, again, the venture EDX markets, which is what we've got in this article, has quietly began executing trades in recent weeks, right? EDX released a statement about their launch Tuesday, 9 months after its backers unveiled their plans for the crypto marketplace. Now, for those who don't know, EDX Markets is backed by Citadel Securities, Fidelity Investments, and Charles Schwab, among others, right? And ultimately, the exchange here is aiming to regulate and secure platform for trading crypto assets, as well as custody and clearing services. Now, look, guys, we've seen a lot of FUD over the last few weeks. You know, some are saying, some are whispering almost that this potentially could be happening because the big boys are coming to play. Wall Street's coming to play. They don't want the other exchanges that have been around or the other crypto exchanges that have been around, eating up all the fees. They want a piece of the pie. And interestingly enough, EDX Markets is also planning to launch a spot Bitcoin ETF. Who isn't planning to launch a spot Bitcoin ETF right now? Who? Everyone is coming out of the woodworks with their Bitcoin ETF because BlackRock has, right? And again, EDX Markets is pending approval from the SEC, from what we know and from what we've seen. And again, clearly the exchange is hoping to attract some institutional and retail investors who are looking for a more reliable and compliant alternative to the said exchanges that we currently have in this space today that are currently facing regulatory scrutiny and operational issues in the recent months that we've seen. Now, again, this is a big deal for the crypto industry as it shows that some of the most influential players in traditional finance are betting on the future of digital assets and are willing to invest in building a robust and trustworthy infrastructure for them. Okay? It's important that you take that piece on mind. And again, EDX Markets could also bring more liquidity. How do we increase the value of Bitcoin beyond hodling? What happens in the bull cycles that come and go? Liquidity comes into the market. This is what brings prices up higher. So again, it could bring more liquidity. It could bring more legitimacy to the crypto market, as well as pave the way for more innovation and adoption of crypto products and services. This is what the aim is for the larger institutions coming in, right? But it doesn't rest here. It's not just EDX Markets. Deutsche Bank, yes, Deutsche Bank has also applied for digital assets license. Another massive bank is entering this space. They've applied for digital asset license from Germany's security watchdog, BaFin. I think I'm saying that right. And clearly it's part of its strategy to expand its fee income from its corporate banking unit, right? And the bank's head of commercial banking, David Lin, announced the news at a conference yesterday. So again, Deutsche Bank is building out its digital assets and custody business, which will allow its clients to access various crypto-related services, such as trading, lending, staking, tokenization, everything that we see that's currently already happening today, whether it's through DeFi, whether it's through SEXs. The bank is also working on integrating its digital asset platform with its existing banking infrastructure. Again, payment systems and traditional finance solutions. So Deutsche Bank is not the only major financial institution at the end of the day that is pursuing a digital asset license in Germany. Earlier this year, Commerzbank also applied for a similar license from BaFin, while Goldman Sachs partnered with a local fintech arm, interestingly enough, called Iconic Funds to launch a Bitcoin ETF in Germany. So what does this show us? This shows us that Germany is also becoming a leading hub for crypto innovation and regulation in Europe, as it has established a clear and comprehensive framework for digital asset service providers to operate within its jurisdiction. We're talking about MiCA. Which is the regulation and framework provided for digital assets to be able to operate in Europe. This is what's happening in Europe. There is regulation and framework in place, clear as day, or as clear as can be, which allows institutions, which allows projects to be able to do that as well. Guys, if you're not, please do smash up the like button. Drop a +1 in the comments, but definitely smash up the like button. And if you're not subscribed to the channel, make sure you are subscribed to the channel, guys. Plenty of content, plenty of news content every day. We'll cover the top 5 news articles every day to give you a perspective as to why things are happening the way they are in this space. Now, as I was saying before, let's move on. FTX. Been a while since these guys have been creeping up, but stands to reason they should be. So let's move on. Third article of today. The legal and advisory costs for the bankrupt crypto exchange FTX are mounting. It's mounting, right? Filing submitted on June the 15th. FTX advisors show that fees and expenses for the period between Friday and 1st and April the 30th total to $121.8 million in legal fees, according to the data compiled by Block Research. So it's building up. Curious where they're getting all of that money from, to be honest. Now, the lawyers for FTX, representing FTX, Sullivan and Cromwell, billed the bankrupt exchange $37.6 million for the period, amounting to 30.9% of all the fees and expenses. And also, the investment banking firm Jefferies billed the lowest amount, making up 0.6% of the total fees and expenses. So FTX, they filed for bankruptcy in December after losing well over $850 million worth of customers' funds in a hacking attack. And again, the exchange has been facing multiple lawsuits from creditors, customers, and regulators since then as well. So again, FTX has also been trying to sell assets and recover some of its losses through various deals and settlements, is what we're seeing. The sad story for the crypto industry really is that it shows how vulnerable that some exchanges are to cyber attacks and how costly it can be to deal with legal consequences of such incidents. Now, I'm not one to sit there and say that FTX had a cyber attack. No, we know exactly what happened with FTX. But again, it's a sad story for crypto at the end of the day. It also serves as a reminder. A reminder is what I'm going to say for crypto investors to be careful about where they store their funds and to always do their due diligence before trusting any platform with their money, right? Remember, not your keys, not your wallet. It's very important. It's very important. If you're not regularly trading every day and you're buying crypto for the long run, then it shouldn't be on an exchange. You should buy it and download it. Well, I say download it, transfer it onto a cold wallet, anything like a Ledger, for example, or a Trezor. Any of those will do. It's the best way to keep it safe if you're holding it for the long run. Fazle Rabi, thank you for the hearts, my friend. Thank you for the hearts. Super appreciated. Super appreciated. Please keep on liking, guys. If you aren't already, please do smash up the like button. Drop the likes. Let's get the likes up to at least 1,000. Right, moving on. Number 2, Japan. That's right. Japan is in the news today. Japan's crypto exchanges are pushing for looser margin trading rules to help the sector grow. So let's get a better article up from this one. What does that mean exactly? What does that mean? It means, let's get the article up so you can actually read it a bit more, right? They want to relax. They want to relax it. One of the reasons being is Japan's crypto exchanges, right? They're pushing for a relaxation of curbs on margin trading, clearly unbowed by last year's global digital asset market crash. But many people in the industry want permitted leverage for retail investors of anywhere from 4 to 10x, whereas currently customers at most will have double the exposure via borrowing, according to Japan's Virtual and Crypto Asset Exchange Association. Now, for those who don't know, margin trading is a practice that allows traders to use powerful borrowed funds to amplify their returns or losses in their trades. Remember, it works both ways. And again, it's a popular and risky way of speculating on crypto price movements, especially in volatile markets. And again, Japan is one of the few countries that has imposed strict limits on margin trading for crypto assets. So if you're a degen, you like leverage, Japan certainly isn't the market for you. And clearly, they do this as part of the efforts to protect investors, prevent market manipulation. However, some crypto exchanges in Japan do argue that the current rules are too restrictive and hamper the growth of and competitiveness for the sector. So clearly they claim that margin trading can provide more liquidity for sure and efficiency to the markets, as well as more opportunity and choices for traders. Now, they also point out that other countries such as the US or Singapore allow higher leverage for margin trading, and that Japan should follow suit. Now, to be honest, there are plenty of decentralized exchanges that allow you to trade leverage as well, by the way. So, this is really from a centralized exchange perspective to allow leverage trading, but you can do that through decentralized exchanges. It's an interesting debate for crypto industry, as clearly it reflects what I would say different views and approaches that regulators and exchanges have towards crypto margin trading. And again, it also raises questions about how to balance the risk and rewards of practice, right? And you need to ensure that investors are, clearly aware and responsible for their actions. You can lose it. You can lose it pretty much in an instant when it comes to leverage trading. And finally, Fidelity, the number one news event of the day. Fidelity is rumored to be planning a seismic move in the crypto markets, according to Andrew Parrish, co-founder of Arc Public. So the asset management firm describes itself as crypto curious, and having mined Bitcoin since 2014, and by 2018 it launched its own separate cryptocurrency dedicated business, Fidelity Digital Assets, FDA, which has since received a New York Trust charter and launched its European operations in 2020. So they've been around for a while, but they want to make some moves. Now, for those who don't know, Fidelity is one of the most influential, and I would say respected players in traditional finance. They've got well over $10 trillion in assets under management. It's also one of the most bullish and proactive firms when it comes to crypto assets, having already invested in various crypto startups such as Circle, Coinbase, and BlockFi. So again, Fidelity has also been actively pursuing a Bitcoin ETF approval from the SEC. Everybody wants that Bitcoin ETF approval, guys. Everybody is slowly but surely coming out of the woodworks. I think we will see it. As well as, they're offering crypto custody and trading services to institutional clients. Now, one of the things or the claims that we see here is that Parrish claims that Fidelity is preparing to make an even bigger splash in the crypto space soon, and that it could be a game changer for the industry. They didn't reveal any details exactly what it is. Could be a bit of that anticipation, that noise that we're seeing in terms of why crypto currently is just pumping above, or Bitcoin is pumping above $30,000 right now. But for their claim, he hinted that it could involve something related to DeFi and NFTs. So again, also said that Fidelity is not alone in its plans. There are other major financial institutions. We're already seeing it happen now. They're all gearing up for some major moves in the crypto space. Interestingly enough, that all the news has actually, surfaced up today. Just today, right? Well, not today, but they've all come together is what I'm basically saying. So again, nonetheless, whichever way you want to look at it, big players are coming in. Maybe there's more control. We'll wait and see. This is huge news for the crypto industry. Clearly, it shows that Fidelity is not just interested in crypto assets, but also crypto innovation, disruption, which is what we want to see. We want to innovate this space. We want to see more disruption in the space. Continues to grow. But it also shows that Fidelity clearly has a level of confidence and optimism about the future of crypto. Regardless of the regulatory uncertainty that we have right now and the market volatility, Fidelity, I would say, does make seismic moves in the crypto space soon. It could inspire more adoption and acceptance among other traditional players and investors. Right, so that's it. That's it for the news today. I hope you've enjoyed it. I hope you've learned something new from all of this. Please do give the video a thumbs up. Leave a comment below. Let me know what your thoughts are on these news events. Obviously, don't forget to subscribe to the channel, guys. Hit that bell notification icon. Subscribe to Decentralized Chain so you don't miss any of my future videos. And I'll catch you tomorrow covering some of the more recent newses. Until then, stay safe, guys. Look after your wallets. Don't leave it on the exchange. If you're not planning to trade regularly, guys, put it on a hardware wallet. Practice some good operational security. And I will see you on the next stream. Thanks for watching, guys. Thanks for watching.